We've got a situation that I have been saying consistently represents good value because management is so in touch with what you want as a shareholder. It's a company that returns a lot of profit, that grows in a very even fashion, and that I think has had the capability of being a put-away IRA 401k kind of stock. And it's Waste Management. And right now we have David Steiner, who we said we'd check back with him. He's the CEO of Waste Management. We recommended the stock not that long ago. It's up. It's not up huge. Candidly, it's not up huge. It's up 6% since we had them on February 8th. They reported earnings. It was up by beat estimates by a penny. I want to talk to let's talk to Mr. Steiner and see what the future holds. Mr. Steiner, welcome back to the show.
Hey, Jim. Thanks for having me.
Look, you have just done more than what we thought you could do. Pricing and volumes remain strong. Obviously, even though we know the domestic economy is slowing, your business reminds me of the old days when Waste Management in the 80s just had consistent growth no matter how slow or fast the economy is. How are you able to continue to have core pricing increases when everybody knows the domestic economy is not doing well?
Well, you know, Jim, I think we're really well positioned, frankly, in this economy with the economic downturn. Most of our business is actually fairly recession resistant, so we're going to do really good in an economic downturn, but we also have a pretty high fixed cost structure, so if the economy picks up, we've got huge leverage that we can bring when volumes do come back, huge leverage that we can bring straight to the bottom line. And so from a pricing point of view, we've been able to do it the good old-fashioned way. We've been able to do it through good hard work by a really dedicated sales department that has really treated pricing like a science, not an art, and they've been hugely successful over the last 3 years.
Now, I know volumes weren't as strong as I would have liked, but you talked about volumes picking up for the first time since late 2006. What are you seeing in volume?
We did. You know, it's a little difficult this time of year for us because the seasonality in our business, the winter months, usually the volumes do slow down, and we had a very tough winter in the Midwest. But certainly what we saw the first few weeks of April were volumes bouncing back very nicely. I think it's a little too early to say that the economy's bounced back. It's hard to say whether it's the economy or whether it was pent-up demand from the weather. But certainly if we see that pattern continue, again, we've got a fixed cost structure that allows us to drop a huge amount of that to the bottom line. It's why we said we're pretty confident we can make our yearly numbers.
Absolutely. But tell me about fuel costs.
Yeah, fuel costs, you know, obviously are going to affect the overall economy. We're able to pass those through a fuel surcharge. Cost us a few $1 million in the last quarter, but generally we've been able to offset all of our fuel costs through our fuel surcharge program.
One last question. We had a series of what I call new tech companies talking about last week, and some of them are unbelievable. Eaton, Parker Hannifin. Many of these guys are doing remarkable things when it comes to engines, when it comes to garbage trucks, in terms of making them greener. Are you seeing any of that stuff, or is that pie in the sky?
Yeah, no, that's not pie in the sky. You know, we're working with our manufacturers right now in a lot of different areas with different dual fuel trucks, with electric trucks. We actually have a large fleet of LNG and CNG trucks in California. You know, we've got a landfill in Northern California where we just announced that we're going to take the methane gas from the landfill, create LNG to actually fuel our trucks, you know, what I call the environmental closed loop. So it's not pie in the sky. It's certainly able to do it. We need to get a lot more cooperation from our manufacturers to get to where we can not only get a more fuel-efficient truck, but a lighter truck that is going to be good for us and good for the environment.
Excellent. David Steiner, thank you for delivering for all our viewers on Mad Money. Good to talk to you.
Thank you, Jim.
David Steiner, CEO of Waste Management, has consistently delivered. This is a stock that goes up over time. There's a lot of you who don't want a lot of risk, a lot of jumping around. WMI's for you. Stay with Cramer.